Copper just hit the 100th percentile. And copper at this level is a leading indicator of global industrial demand. Something is breaking beneath the surface, and the data confirms it. Right now, the S&P 500 is at 7,412.8, the 99th percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection, says the data needs to confirm. The commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. The commodity analyst called it commodity supercycle. Oil at $101.8 confirms it. 142-day streak. Snyder called it dollar liquidity crisis. Yield curve at 0.47% confirms it. 4 days running, Gammon just moved from wrong to right. Score 1 for Gammon. Just moved from wrong to right. Score 1 for Gammon. Credit will blow out. Yield curve agrees at 0.47%. McElroy might be right, but the data has not confirmed the thesis yet. 141-day streak, Hartman is waiting on confirmation. The narrative holds, but the data has not validated it yet. 135-day streak, the dollar analyst just moved from right to early. The dollar analyst might be right, but the data has not confirmed the thesis yet. The volatility expert just moved from right to wrong. The volatility expert's call is not working, for now. VIX moving against the bearish thesis, up 0.6%. Score today, 3 right, 3 early, 1 wrong. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. Today's big question: are commodities in a supercycle, or is this the top? On one side says, the data needs to confirm. That is the setup. Everyone hears it on the podcast. It sounds convincing. On the other side, the commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. Two smart people, opposite conclusions. So who is right? Here is what makes this interesting. Oil is rising while gold is falling. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. Oil at $101.8, 96th percentile, up 3.8% today. Gold at $4,700, 77th percentile, down 0.4% today. Copper at $6.49, 100th percentile, up 1.2% today. Bottom line, the data is split. Neither side has a clear edge, which means the resolution is coming soon. If oil drops below $80, the supercycle call is in trouble. Right now, it is at $101.8. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $101.8 is in the 96th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,700 will track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 71 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points, currently at 79 basis points. Pace is flat or improving, no urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial, jobless claims, copper-gold ratio flashing red. Snyder says the euro-dollar system is tightening and nobody sees it. The data agrees with that assessment. Phase 1 holds with 71 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. Riverside, CA, payment burden is past the breaking point. Temecula, CA, median home about $1,488,000 on about $77,000 household income. Price to income ratio, 19.3. When the math stops working, sellers find out before buyers do. Marin, CA, payment burden is past the breaking point. Point Reyes Station, CA, median home about $1,507,000 on about $79,000 household income. Price to income ratio, 19. When the math stops working, sellers find out before buyers do. Stewart, GA, lenders are saying no, at scale. In Stewart, GA, the HMDA denial rate is 73.5% across 68 applications. Top reason, credit history. Credit doors closing is the slowest, surest signal of a turn. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle, or is this the top? Let me show you what happened the last time we were here. Copper at $6.49 is in the 100th percentile. That means it is higher than 100 out of 100 days in the past year. In 2022, copper dropped 35% on China lockdowns and global recession fears. In 2020, copper crashed in March, then doubled over the next year on stimulus demand. In 2011, copper peaked above 4.60, then gave back 30% as China growth slowed. Different environments, different catalysts, but every time the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, oil at $101.8 is in the 96th percentile. The last time both copper and oil were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. History does not pick a winner here, but it does say the resolution is coming soon. Be positioned before it arrives. Here's what the data says to do right now. Do not chase the S&P 500 here. The 99th percentile is reversal territory, not an entry point. Avoid Phoenix at 41% payment burden. That is stretched territory. Phase 1 holds, no alarms, but the runway at 71 basis points is shorter than last month. Every signal is live at analyze.builderslens.com. 7 speakers, 65 signals, 1 question every morning. Who is right? Subscribe, and I will see you tomorrow morning.